some of the Americas are just perhaps going to sleep and some of them are waking up. So good morning, everybody, and welcome to the first working week of the fourth quarter. I'm delighted to be joined by Andy Lavan, COO of Sahara Energy Resources, Peter Maguire, CEO of XM Australia, and Omar Najia, Global Head of Derivatives at BB Energy. Thank you, gentlemen, for joining us today. Andy, I'd like to start with you, please. OPEC's meeting today. I'm not asking you to get out your crystal ball, but let us know your opinion on whether you think the market's tight enough to warrant some of these calls for more output than planned.
So I listened yesterday to Mike Muller, and I tend to agree with him. I think we've moved from this period of seeing that the issue was a demand issue to now it's a supply issue, and I think the world is coming back quicker than people thought it would. So I think there is this dilemma that OPEC will have in terms of how fast do they come back, and I think they're probably, personal opinion, their bias is going to be that they'll come back a little bit slower just to ensure that they've got support for prices.
Omar, would you agree with that? And I mean, at what price do we have to see to sort of make OPEC a little bit more intuitively want to increase production? You know, with the risk of obviously starting to lose a bit of or lose some revenue on price. 80 last week. The price trigger. Some background noise there.
So I think basically that, you know, OPEC is always, you know, they want the price higher. I don't think there is like a limit to the upside where they will say that, you know, no, now prices are too high. So you know, they need prices up. The market is trending higher. Demand is good. And even if they were basically to turn the spigots on full, etc., I think it's quite doubtful what they can actually do in terms of the bottom line is I don't think it's a strategically smart or tactically smart thing to do to basically stop the market from rallying. So you've seen energy prices go crazy on LNG and natural gas and all that kind of stuff. So I don't think OPEC is in the business of kind of, saving the world from the lack of foresight, investment, turning green too quickly and saying that, I mean, even OPEC now is saying that, end of oil is like 20 years away or 30 years away or whatever years away. So,
So is it LNG and gas prices then that are driving this upward momentum today in oil, or is it true fundamental? Which is it?
No, it's not. So basically, I think what you're seeing is problems to do fundamental issues, not to do with like a news story here or people didn't expect there, but to do with real issues to do with investment in the oil market, to do with refineries shutting, to do with governments wanting to go zero carbon and all green way too quickly. So you're seeing basically chickens come home to roost for years, a decade plus of whatever you want to call it, allocation of funds, mismanagement, whatever. So I don't think it's an issue that's going to be solved by somebody waving a magic wand and saying, well, we're going to increase production at this meeting and everything's going to be okay. No, I really don't think so.
Okay, but I mean, you're talking about long-term planning and the whole sort of strategy of the energy world, if you like. But Andy, to go to you on that point, the reality is that OPEC has been managing the market on a monthly basis and on a short-term basis, regardless of these long-term moves to energy transition and underinvestment, et cetera, in the industry as a whole. But just to put the same sort of question to you, do you think that the problems that we're seeing in the natural gas shortage market and the price spikes there, does that complicate OPEC policy? Does that complicate the situation for them, or they are, as Omar was saying, separating themselves from that game?
I think the picture is very complicated. I totally agree with Omar that this is something that's been brewing for quite a long time. It is very easy to stop investment it's very difficult to restart investment, and new investment takes years to come back. So you've got this dilemma that OPEC can only pull short-term levers, and the world around them is pulling what they see as being a long-term lever, moving towards a greener economy, which means they stop investing capex, which has a much shorter-term impact. So I think things like gas prices going up is just a symptom of this, and we're going to see more of it. It's a bit like, you know, climate change. Climate change is making the world hotter, but we see colder winters. So you'll see more volatility in terms of availability, in terms of supply, as we kind of work our way through what all the various players in the oil market and the gas market are doing in terms of investment and supporting projects, or not investing and not supporting projects.
And do you concur with the viewpoint of Bank of America in the last couple of days that we could see $100 oil quite easily in the next quarter?
I think trying to guess where the oil price is going at that level is a bit of a mug's game. I agree with Omar. The market will find its right place. Okay, I think as oil prices go upwards, you will change how the market dynamics, you'll change how people invest, you'll change how people see it. So there will at some point be a resistance. The challenge is where that resistance is, and there are so many things that go into creating that resistance. It's very, very difficult to say what would happen if OPEC turned around and said, no, you know what, we're not going to increase production at all for the next 2 years. Then you start seeing the market rally very, very strongly. I think 100's a bit tough, certainly in the next 6 months, but longer term, fundamentally, oil is going to go a lot higher because investment is going to go away, and OPEC are going to be the only ones that are producing oil ultimately.
Peter, I won't go to you for your OPEC thoughts right now. Let's move to Asia specific and talk a little bit about China, which has its own problems to be thinking about these days. I mean, you know, it's a whole list. I don't know where you would start, but, you know, power crisis, coal having to be ramped up again. You know, even it's having even problems with its agricultural production because of power problems. So, you know, how is this all going to impact China's GDP trajectory, which has already been downgraded, obviously, several times this year?
Well, I think straight off, it's got to have an impact. There's no doubting that. And the uncertainty as far as supply chains and supply lines and all of the issues facing from an energy standpoint and agriculture doesn't bode well over a winter period in China. And wrap that up with, of course, the ongoing saga with Evergrande. It nearly brews to a perfect storm in a lot of ways. So I think that centrally, the government's going to have their hands full over the next matter of months, increasing oil prices and energy costs are not going to go well right across Asia, and certainly facing into China, and again over that winter period. So there is no doubt that we're coming out of this COVID demand situation. By the way, we're just starting our 4th month of lockdown in Sydney, and it seems to be that things are ratcheting up very, very quickly globally. So from a demand picture, foods, energy, and you name it, everything seems to be galloping ahead, and has been demonstrated with the price of crude, price of nat gas, price of some of the base metals, aluminium, absolutely very strongly bid up. So it's going to be, I think, the rest of the year, no one could forecast. We spoke with Sean going back about 6 weeks ago, and everyone was pretty much saying, well, $60 will be where it's sitting probably by November. And I've just listened to Andy's point. It's very hard to speculate on a forecast moving forward. But if maybe it's going to be higher than what we're thinking, maybe 85, maybe it's got a 90. I don't know. It's not a good sign if it gets to 100. Inflation's pretty much out of control in a lot of ways. And I think they're in a lot of mindsets across global economists, they're thinking, is it a soft stagflation story at the moment?
Yeah, I mean, that's what I was going to get on to and come back to you with, is that, you know, there has been that word stagflation touted the last couple of weeks. It's as if, oh, surprise, surprise, you know, we've got inflation. I mean, I don't know who, you know, who has got it wrong and why? You know, how did the world get it so wrong? You know, suddenly it's as if everything has caught up with us, you know, both from the demand point of view and supply. And where would you say was the inflection point where things should have moved more quickly?
It's like saying to a drunk or a person who's got a drinking problem, if you keep on doing this, you eventually will have a liver problem. And unfortunately, we've really kicked this can that far down the road with quantitative easing, say, call it whatever you want, printing of money in the tens, probably a 10 trillion number across all of the countries over the last 2 years or year and a half. The judgment day's got to be, when do we start seeing rates creep up? As far as taper, as far as growth numbers, you were saying, you know, the Chinese story as far as GDP being pulled back. So these are all concerns on a big global macro theme. I'm just sitting here going, wow, where's the next opportunity?
So I mean, what is the US going to do? The US Treasury is going to run out of, you know, it's running out of cash unless it keeps, you know, raising that debt ceiling. I mean, it's propelling the same problem forward and forward. We're expecting some tapering in November. That's sort of you know, goes without saying right now. But where do you see the interest rate game going? Being led by the US?
I'm curious on two fronts. First off, we've got US dollar index now through about 94.2 US dollar, the US dollar index. It's come back a little bit from that 94.5 that we saw going to last Thursday, Friday. And it's had a big, strong push up over the last, you know, week and a bit. There's the first part. The second part is I want to see what happens in Kiwi land, New Zealand this week, whether they punch a 25 basis point increase. And then what's the general mood across other central bankers as we start to look at pulling taper off the table, and do we start to see, you know, the rumblings? Yeah, well, we're going to add X and we're going to do Y. So yeah, it's going to be a very fascinating lead up to Christmas.
We've got a comment here by yours truly, Sean Evers, actually. Maybe we can address that point. Andy, I'll go to you with that. You know, I mean, I know it's a currency question, but the blackout, coming back to Europe from the US and China, you know, the energy crisis in Europe, blackouts, potential blackouts in Germany, UK, obviously lines at the petrol stations. So again, two things there. How do you see that impacting the economic recovery that we've been sort of waiting for and arguably started for the summer quite nicely? And how's that going to impact any currency weakness on that front?
So I think, and I was just kind of replying to that in terms of a comment. I think what's happened over the last, it's going to be 2 years soon, with COVID is it's highlighted a number of fundamental issues in the developed economies. If you just look at the UK, for example, who would have thought that Brexit would result in a lack of HGV drivers? Who would have thought that actually, as the economy starts to reopen, we suddenly have runs on food in shops because they can't get the supply? The world has built itself up into an interconnected economy. And as we start to kind of piecemeal it out because of COVID, suddenly it's now become even more about just my little area. Even if you look at places like Australia, you've got almost competition between states. So that really has highlighted some of the weaknesses. And that's what you see in terms of the blackouts, the issues around gas supply, the issues around petrol supply, all that kind of stuff. And I think it's going to be intriguing to see how the governments kind of move out into the new world, because you can't fix those without pumping money into the economy or taking down borders that you've just rebuilt. So actually, we have an enormous complexity in terms of where the world is going to go once we get over this kind of short-term COVID issue.
Omar, just to touch on the dollar index strength, etc. Peter alluded to where we are right now. And I don't know that that's been much volatility on that front recently, but where is that index going in your opinion? And again, and how is that going to maybe help solve any of these issues that we're seeing in terms of energy demand or energy crisis? Do you see that impacting that at all?
So basically, when in my opinion, when people are worried, fearful, they buy the dollar. like a safe haven thing, right? So I think the dollar index from where it is now, 94 and change, basically, I would expect it to fall. And I want to see it considerably lower. And I think all this talk about tapering, I mean, it's just, I mean, I like to think about things, very simply. So the US has massive debts. The Western world has ginormous debts, absolutely massive. So if they raise interest rates, they're stuffed. Not only are they stuffed, they are severely stuffed. So all this talk about, we're gonna, tapering and here we go and all this kind of stuff. It's just, to me, it's just, I don't think it's going to happen. I
So
think
are we
basically,
waiting for a big crash? Is the only thing that can stop us?
no. I think basically what we're waiting for is what we're seeing now, which is inflation, which is the fact that the Fed and every single central bank is saying this is transitory, which is also laughable. And the only toolbox that they have is more and more printing of money and more debasing of debt. And more inflating the asset prices. Yes, at some point you hit a wall. So it's really simple. You basically, if you making money, professionally on markets, all the rest of it, you keep buying because the trend is up, everything's going up. You just keep buying. At some point, you hit a wall, and hopefully you sell before or after or during or whatever it is. But the idea of kind of saying, the top is here or hereabouts or whatever, I think is not very smart. And I agree with what Andy's saying. I think basically, we're gonna go higher on oil at first, come off again, and then I think the next big up is going to be very interesting. And again, I don't think that oil at $100 is anything but extremely cheap. Why? Because you have inflation. So if oil was trading at 100 and Apple was trading at $1 or Google or whatever, or Bitcoin, for example, now you have basically all those prices flying. And to expect that oil just sits there because, OPEC is going to do something or not do something. And I disagree with anything to do that, OPEC has managed the market, month in, month out. OPEC is Anyway, so that's my opinion. I think markets are going to rise. I think you're not going to see tapering. I think the dollar is going to fall. I think the reason it's gone up now is because people are worried and fearful. The Chinese story I completely disregard. The Western world is in a huge amount of trouble, and China is by far the biggest economy in the world right now. The stuff that they point to, the Evergrande, oh my God, the next Lehman, and look what happens. Yeah. Absolutely nothing.
Yeah,
absolutely nothing. Same with COVID. Same with shale. Same with all this stuff. Same with Iran. Blah 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 blah. Nothing happens.
China, Iran doesn't matter. Yeah, but Peter, just to go to you on that with China, the Evergrande debacle, it'll pass. It's another financial crisis within the sector, a very big sector, but it has depleted investor confidence to an extent, hasn't it? I mean, in terms of the legacy effect of that, does it make a difference? I mean, it's past almost for such a big economy. China is, as Amar said, these incidences are not actually that big on the greater scheme of things.
Well, I don't know. I mean, they make, just for a company standpoint, they build 600,000 homes a year. We know they're in electric vehicles. We know that they're the second largest player in the domestic market. How much of the economy, and property represents around about 31% of GDP, how much appetite is there out there to, if this is a contagion across other developers, being property developers, that is, and that whole construction arm? This is why I think we've got to wait and see how it plays out. I saw that reading only a couple of hours ago, they missed a payment. I believe there was a payment due yesterday, Sunday. So I just want to see all the workings, all the ramifications, and then be able to understand, this is what's happening. Maybe it's not going to be a layman. I hope it isn't.
Do you think there's a struggle within Chinese government with the policy? They've had obviously this policy of, their sort of long-term energy transition, clean up the air, policies, and there's certain restrictions on production and industrial production as a result, which are very strictly implemented. And then they have this power crisis today that's threatening to get worse in the winter. Then they have to also ensure, and saying they're going to ensure, electricity and power to their people. Is that a conflict with the government, or do you think they'll manage it okay? They seem to be sort of stating both prongs equally. Can that be done?
Well, all I know is it gets frightfully cold. I've been to Beijing in January and it's frightfully cold. I've stood on the Great Wall at -12, and you need a lot of natural gas, you need a lot of energy, you need a lot of coal-fired power plants, you need whatever else to generate sufficient power to keep that whole ecosystem called China very much alive during a winter. So if there are supply issues and there are other dramas across the globe with energy, then this doesn't bode well for Europe over winter, doesn't bode well for UK, and certainly not into the likes of China. So I sit here looking at it at the big picture and saying, I think volatility is going to be the key word over the next 3 to 4 months as far as trading.
And would you agree that we're facing a period of stagflation or just inflation and economic growth?
We're facing dramatic inflation. And as far
what
as
about
growth,
the economic growth part?
Yeah, well, this is the problem. You've got soft terminology as far as a stagflationary environment. So we need to see growth numbers coming out of the globe. We're just coming out of an 18-month horrific hibernation, and some of us are still right in the hibernation. So being where I live in Sydney. So we've got to see where the whole world is February, March next year, and everyone take a deep breath and go, aha. And if we've got energy prices at 95, if we've got major supply issues and all sorts of heating concerns and electricity production across the globe, then that doesn't sit well, I think, from any economic standpoint. And how does it affect GDP?
And do you think it's a matter of months or years before we sort of go back to normal growth pre-COVID? Pre-COVID, you could argue the world wasn't doing that well anyway, fundamentally. But I mean, is it now, people were saying a few months ago, 2022, back on track, if COVID is under control, and we could argue it is going to be under control by next year. But is it a matter of months or years before we go back to the previous model growth?
I'm not sure that we'll ever go back to the previous model. I think we've seen various countries do things that are a big step backwards, and it's difficult to see how they can undo some of those things that they put in place. I think it's going to take us a lot longer than anybody thinks to get back to anywhere in terms of normality. Now, that doesn't mean to say we won't continue to see growth in commodity prices, growth in asset prices. I think what we are going to see is a much bigger diversion in terms of kind of various countries growing and various countries not growing. So in aggregate, it may look as if we're back to normal, but it will be anywhere short of normality.
And we haven't even really, we've talked about Asia, and part of that is part of the developing economies, but we really haven't touched on for a few days now on this program, emerging markets. I think they seem to have been forgotten. In the impact that COVID may still be having, but B, in terms of this perpetual sort of energy crisis that's hitting the Western world and Asia, parts of Asia. Omar, can I go to you to comment on that before we sort of look at our survey here and look at the week ahead? Emerging markets, are they anyone's concern at the moment? And OPEC?
No, I think
is OPEC considering?
No, I think in the larger kind of you've seen Asia, you've seen China, you've seen emerging markets correct, and I think that correction is still ongoing, but I think they will rise again. Now, the West is basically lagging that, so I don't think that they're quite as ready to start their corrections yet. But I mean, an interesting thing or an interesting way that I like to think about markets going forwards in the world is that the world seems to be in flux between centralization and decentralization. Everything seems to be much more moving towards a kind of centralized thing, whether it be, politically and running the economy, and OPEC running oil and all that kind of stuff. So you have this kind of shift in the world, at least in the Western world, from decentralized, competition, I don't know what, to centralized, to governments paying citizens for just being citizens, and that kind of stuff. And I think that's going to have the biggest impact going forward. Centralization or re-centralization, whatever you want to call it, nationalization, the reduction of the entrepreneur's spirit and all that kind of stuff in the Western world. So I think that's going to be the
decoupling globalization, which is happening obviously on the national front and in various regions. Or just look at the survey result of that, which was a question on whether OPEC should base its decision today on inflationary considerations. Oh, there you go. There you go. Yes, that's surprising. Amar would disagree with that, I know, and probably a lot of others. Should OPEC consider it? Considering we've just said that commodity oil is way behind other prices, so that's kind of an interesting result. More people do think it should factor into their decision making. Peter, just to go to you, back to you, sort of week ahead outlook, anything we're looking out for, and I'd like to ask you where your viewpoint on equities is going. You've been quite bullish, generally speaking, on the trend line of that. Where do you see equity markets going, and anything to watch out for this week?
First off, I'm very close eye as far as New Zealand. So that's the first cab off the rank, and I just want to see the tone of the meeting. I just want to see the general the storyline. As far as equities, eventually there comes a time that markets outgrow themselves and they become exhausted to the upside. And I'm not suggesting we're there yet. We are in October, and October is always a very volatile month. And I'm just looking at the big themes out there and what the storyline is from a trading perspective. We've had such a massive run up. There's been no thoughts as far as correction. There's been nothing really to take the momentum. Have a look at what's happening with the Nikkei. Have a look where the Dow is, and a number of the big markets, China, but certainly India. So I think that there does come a time that there's maybe a pullback, or maybe just some of that hot air comes out of the market. And I think that we are probably entering that stage from an inflationary point, and from just the general consensus. We haven't put as I took on board Andy's point, no, I don't know whether we do come back to the old way. So at the moment, I'm thinking I wouldn't be surprised to see a little bit of that hot air come out of the equity markets, and I wouldn't be surprised to see it happen this month.
And do you think that might be influenced by what happens domestically in the US in terms of the bills that Biden's trying to pass through from an expenditure point, fiscal point of view? Will that have a bearing, do you think?
Absolutely. The general feeling towards Biden, the comments, what I see, and as far as the press, he certainly hasn't made himself any favors or any friends, and he's certainly run out of favors. And the story, what's happening as far as we've put Afghanistan behind us, we're conscious as far as inflation, we're conscious as far as where the US economy's earnings season and what's happening from a domestic standpoint. That hot air has been blown into the market, and I think it just comes a point in time that some of that, through the debt ceiling and other large themes, are going to take some of that hot air out of the market.
Okay, Andy, we'll let you have the last word. Just week ahead, this week, anything we're expecting, whether in the Middle East or in Europe, apart from the cyclone that's going to hit us here in the Middle East in a couple of hours, apparently, Cyclone Shaheen. But again, in terms of week ahead statistics to look out for, the US job statistics are coming out, but people are now saying whatever happens there with employment figures, inflation's here, and that's what matters.
So for me, I think it would be nice to see some rain, get the dust out of the air, bring the temperature down. I think the big thing for me though is what kind of fix does the US do in terms of the votes that they're trying to get and the plans they're trying to push through the House and the Senate. I have this horrible feeling that what we're starting to see in the US is exactly what we've talked about. Essentially, the developed world becoming less and less effective in terms of doing business. And the US is at the forefront of it. And if that's the direction we're going, then actually the Western world has got a lot of issues in the future.
Okay, no shortage of problems to look forward to. Thanks very much, gentlemen, Andy, Omar, and Peter for joining us this morning. Have a good Monday and look forward to seeing you next week. Thank you.
Thank you.
Thank you.